Hello guys, hope I am on time this time. Okay, so as you can see, thank you very much for coming. So I have Jocelyn. Thank you, Jocelyn. I see your YouTube ID, Jocelyn. So thank you very much for coming. So we just begin this session, and I will be waiting for a few minutes until the guys come, and then I can begin the session of today. So we will speak about many things as usual, but the main subject is trading options and stocks. So we try just to see similarities and differences and the other stuff. Some people, they like options, others they like stocks. Each one has his own reasons. Okay, each one has his own reasons, and it's all about risk. So trading stocks in general, it is not as risky as options. This is in general. But understand that trading stocks also can be very, very dangerous, especially with penny stocks, especially with some earning news. Okay, sometimes it's sometimes it's very, let's see, it's very hard for some people to assess risk. Hello, Wiseman, how are you? Thank you very much for coming. Okay, Muhammad Farah, I hope you are fine. Thank you very much, Muhammad. And as I told you, you should know what is your risk. But in general, I'm speaking in general. I'm not speaking about specific things in trading or option. In general, options is more risky than stocks. Now, why is that? In general, now what is an option? An option, it is a contract. Okay, it has time and it has a price value. It means the value of the contract, and it has what we call time value, which is called extrinsic value, and we have what we call intrinsic value, which is the value of the contract itself as a price. Okay, so in option, what do you do when you buy an option? You buy time. So in stocks, you don't buy time. For example, let's say you want to buy an option for 1 week. Okay? Tony, thank you very much you say, yes, I made it again. Thank you very much for coming. So we are just at the beginning. I'm just trying to develop this subject, and I will speak until I finish this subject, and then I can go and answer all your questions. So, one of the main difference between trading stocks, trading options, is that options are very dangerous. I will explain later why it is so dangerous. Okay? Now, in options, you buy time. But in stocks, you don't buy time. I give you an example. Let's say you buy Apple. You buy 100 shares. You stay Let's say you are following a trend like we do, let's say 6 months. In these 6 months, you do not pay for staying in this trade. You don't pay anything to the broker. That's why buying stocks is better than buying ETFs or mutual fund. There is no because there are fees. In stocks, there is no fee. That's why Warren Buffett buys only stocks. He doesn't trade like doing trades and the other stuff. So, this is the one measure you can think about. Let's say we say 6 months of Apple. You buy 100 shares, you stay 6 months. Let's say you make money. That's good. It's a trade. So during these 6 months, you don't pay anything to the broker. You pay only the commission to buy and to sell. And now most of the brokers they don't have a commission. Things have changed this month, and a lot of people they ask me, it seems to me that all the brokers, yes, there is a big shift. So whenever there is a big shift, there should be something hidden. Okay, so brokers they don't give free things. They should get their money somewhere. So you should understand that. And a business is for making money. It's not just to give you a free thing for nothing. Okay? Now, the first thing we say, the difference between stocks and options is that in stocks you don't pay to stay. Now in options, if you want to buy an option with the same strike, it means the same strike that you choose for 1 week, and then you want to buy another option for 6 months. Let's say you buy Apple for 6 months. So this time from 1 week to 6 months, you will see that the price of the option is too much expensive. Now you ask yourself, why is that? I am buying only the same price. So why in 1 week they ask me, for example, $200, or let's say it is $200. Just any example. Let's say it's $200. Why they ask me 1,000 or 2,000 for 6 months? What's the deal? I'm buying the same strike. It is because option contract, they sell to you time also. Okay? They sell to you time. And understand that most of the trader will lose a lot of money. Why? Because options, you don't know. There are a lot of calculations they do and they add, but you don't know what is it. Even if you know, you can't calculate. For example, if I tell you, you buy Apple at 200, okay? You sell it at 300. It means you make 50% of your money. 50%. From 200 to 300, it means you have made in Apple 50% profit. So you have made, if you buy 100 shares, you have made $10,000. You bought at 200, you buy 100 shares, it means $20,000. You get 50%, you get 10,000, so you make $10,000. Okay, that's good. Now, if you buy, let's say, a contract, one contract, which is 100 shares, let's say $1,000. Just an example, okay? I'm not going to go to the chains, and I'm just giving you an example. You buy $1,000. Do you think that you can get 50%? Like you get, after 6 months, you get $500 because you make 50%. So the thing is, you will never make the same. You can make more, you can make less according to the calculations. Sometimes you make more and more and more. You don't make 50%. You make 200%, 300%, 500%, because the calculations are so difficult. And you will never know how much you get. Because stocks are easy to calculate. Okay? As I give you an example. You buy the stock as 200. It means $200. You buy 100 shares. So the trade for you is $20,000 that you spent on these 100 shares. So when you say 200, this is the price. It goes to 300. You know that you make $10,000 because 100 by 10. Okay? You see that? You see the thing? So you have 1,000, $10,000 is the whole money that you make. Okay? So it's easy. It's easy to calculate. Now, if you go to options, there are a lot of things included, and this, who made these calculations? Who created options to understand the deal? The guys who created the options are Wall Street guys, and Wall Street guys, they don't risk anything. They want just to take your money. Okay? And this is the deal. A second thing I want to speak about options is that it's leveraged. Now, what does it mean, leveraged? Leveraged, it means, let's say you buy 100 shares of Apple with $20,000. Okay? And the price is $200. Okay? That's simple. Now, let's say they give you find a contract which is only 1,000. You ask yourself, it is so cheap. How can stupid Wall Street guys, you can control $20,000, you control only with $1,000 with a contract. It means, what does it mean? You think that it's a good deal. This is the good deal. And when you see other guys, if you go to other channels that are speaking about options or websites or whatever, they say it's a good thing. But you understand that Wall Street guys are not stupid people to give you $20,000 and to give it to you for $1,000. Where have you seen this? O2 said you can lose your shirt in option. Yes, I will deal with all this later. If you have questions, please ask and I will answer later. So do you understand? Okay, do you understand? Do you think that Wall Street guys created options just to give you free thing in the market. If you go, for example, to an auction, you know that a new car, let's say a new car, it is $50,000 in new. Are you going to get this car? Someone tells you, oh, okay, I can bring you a car that it is normally $20,000. Just give me 1,000. Do you believe him? There must be something wrong with the car. This is not true. Okay? Hi, Nasa, thank you very much for coming. So this is not true. There is something wrong. Now, understand that you can make money. Yes, I don't say you don't make money. Yes, you can make money, a lot of money from options. But if you grasp trading techniques and you grasp how to calculate things, okay? And this needs a lot of time. It needs a lot of techniques. It needs a lot of practice, because you can succeed in anything if you are stubborn. If you are stubborn to succeed, because you will only know secrets of trading, either stocks or options or forex or futures. You only know when you know your risk very, very well. So people who are trading options, most of the guys are beginners, and they think because it is cheap, it is good. When you go to the market, listen, I am not a dealership or have cars, because sometimes when I give an example of cars, someone told me, "Oh, are you a dealer? You talk always about cars, about value." No, I'm just giving you an example because you understand well the real examples, not in the stock market, but the real examples. Okay? If someone brings you a car and he tells you that the value of this car is $20,000, just give me 1,000 and get it. Okay? Are you going to believe him or her about this transaction? Okay? You should never believe. Except it's someone who wants to donate this and he's dying by cancer and he wants to do something good for his future, after life or something like that. Okay? Or it is your mother or father or your sister and he wants to donate this car, so he tells you, just give me 1,000, take it, or it's free. Now this because they love you and they give you the, but don't understand that Wall Street love you and give you something with $20,000. They give it for 1,000 and you are happy with that. You should never be happy until you decipher their game, because everything in the stock market is just a game. When you know how to play the game, to understand what's going on, you can make money. But it's not something that the secret that you know and then you need practice. But you will succeed. I'm telling you for true. You will succeed if you continue and you don't do big stupid things. Okay? Hello, Jerry Pollitt. Hello, Artkov. I will answer your questions. For example, Jerry Pollitt, I will answer all your questions later, one by one. So for now, I'm trying to just explain the things about options compared to stocks, and then when we finish, I will try to answer your questions one by one. The first come, the first served, as they say. I will not go at the bottom explaining or answering his question, and I leave the other guys the first. No, but I believe me, I will answer all your questions. So don't worry. Ask questions and leave them. When we finish all this, I will try to answer them. Okay? According to my knowledge. Okay? Because this is what I teach, and this is what I do. Now, when I say options is leveraged, it's the same as forex, currency pairs. It's like futures. But here is the deal. And bonds also. If you do trades with bonds. But the thing is, currency pairs, bonds, and futures, you can calculate the risk. It's very easy. Because they go up, they go down, you will see how much you make. But, and they are all contracts, like futures. You find E-mini contract, it's a contract. It has time, it has a price. It goes up, you make money. It goes down, you lose money, and that's it. Okay? But options is a very special vehicle of making money. Very, very special. And it is very dangerous because Wall Street guys, they don't give you the formula how to calculate the price. It means it's ambiguous. It is ambiguous. They will give you a lot of things. Now, why they give you a lot of things? Because they will fool you. You will never know exactly how much. Because understand that options is based on the price of the stock, but it doesn't behave the same. For example, I will give you an example. We have top series question. Top series, listen, we are speaking about options and the trading stocks. So I will answer your question, but later, okay? We are not speaking about that. So you can ask questions. Hello, James. You can ask questions, and later I will finish. So as I told you before, so in options, the calculation is difficult. I will give you an example. Let's say you buy a contract of Apple. Apple has gone $1. It doesn't mean that your contract is going by $1. You will never know. This depends on the calculation they do. And these calculations are hidden. I don't know why they are hidden, but they are hidden. Now, if they hide the information from you guys, it means they can do whatever they want. So it's not something that it is exact. Because the ingredients change. Okay? Let's say someone gives you food. If he puts little salt and sometimes normal salt that you eat the food, it's good for you. Sometimes they put more salt and you see that there is more salt, you can't eat it. They put a lot, for example. So, but the restaurant or the chief in the restaurant or the waiter that gives you the food, they don't tell you how much. But when you eat, you will understand. So when you eat, it means when you buy. Now, when you buy, afterwards, 1 day, 10 days, 100 days, or you do day trade, for example, a few minutes, 1 hour, 2 hours, you can do day trading also. So you will never know how the price move. And it is very, very difficult to know. So what you should do, you should at least have a general idea and you experiment. You experiment, it means you practice a lot. Don't worry about time. Even if it takes you 1 year, 2 years, 3 years, 5 years, and then you know how to trade and you make money, what you need later, you need only big money to make big money. Because when you know how to trade, the problem is that money. If you have $5,000 and you know how to trade very well, your account will go slowly. But if you have 100,000 and you know how to trade, you can go quickly because the money that you make each week or each month will be big, or in the year. So you understand? So always when you have small money, you can trade options or penny stocks or something, but understand that you don't have that much money, and it's so risky. Now, one time I have been doing a live, and someone comes. He's new, and I was speaking about stock management, about stop loss, about just in general things. And he told me that he lost 90% of his stock in 1 day. I tell him, this is rare to lose 90%, except when it is a bad news for a company. Like, for example, the earning news. Or for drugs companies, not just earning news, but it could be FDA refusal. For example, you know that drug companies are very, very volatile. A stock that it is $10, it can go to $100 in a month. Why? Because the FDA approve a medicine, a drug, and they begin to sell. So this is a big news. Whenever there is big news, the stock will soar. It means it will go so high that you can't imagine that. Now, it can have the opposite. A stock that it is $100 and they are making a drug, and through phases, you know that drug, they send it to FDA to cure some disease. It should take many phases until they see it's a good drug to be administered to patients. So this is not easy. It's a long process. All what you see by prescription, okay? All what you see by prescription, it means when the doctor gives you a prescription, all the drugs that you see there have been approved by FDA that they will work to some extent. But out of the counter, they will work, but they are not difficult to get approval, and some they don't. For example, vitamins and protein and the other stuff, they don't go by FDA because they don't cure any disease. It has nothing to do with diseases. Okay? So, James Armstrong, thank you very much for coming. And the other guys, I will answer your questions, so try to be patient when I finish the explanation, okay? So, understand that I am developing many ideas here about options, just to understand the difference. Now, what about stocks? Most of the stocks, they have general risk, but there are some stocks that have higher risk. Technology stocks, drug stocks, these are the most volatile in the market. But the problem, there are other kinds Like IPOs. IPOs, which means companies, they go public, and sometimes they go very, very, or excellent. Sometimes they lose a lot. A stock begins with $10. After 6 months, it is 5 cents. Yes. And then this stock will be kicked out. It means this company will be kicked out from the exchange, because exchanges, they have rules. Nasdaq, it has rules. New York Exchange, it has rules. American Exchange, it has rules. It means rules. It means the price is very important. So when they see that the company, because the price, what does it mean, the price? The price it tells you how big is the company. I give you an example. Hello, Fabian. Thank you very, very much for coming. Fabian, I will explain to you tomorrow what you asked me. Thank you very much for coming, Fabian. So, as I told you, IPOs are very, very volatile. It means they can go very, very well, they can go very, very bad. Very quick, like mini stocks. Okay? But the exchanges, they have rules. Each exchange, for example, an exchange, I just give you an example. I don't know exactly how much money they will take the stock, the company, out of the exchange. Let's say it is $1 or 50 cents. Why is that? Why the exchange take this company out? It's just because it becomes too small to trade. That's why they kick this company out, and it will be registered into the over-counter stocks that are very, very volatile. Okay, they kick the company out, and it will not become public. It's in the secondary market, which is what we call black market. Hello, Carlos Diaz. Thank you very much for coming from Miami. Miami is very hot, man. I want, although here it's not very hot, but I want to go there. Or to go to Caribbean, like last year I go to Caribbean. It's very nice. I want hot weather. I don't like cold weather. Here there is no snow, but still I want hot weather. Thank you very much, Carlos, for coming or joining us. Okay? Yes, they got kicked out from the exchange. Now, why is that? Because of capitalization. You understand that, for example, the biggest companies are in the Dow Jones. We have 30 companies that are the biggest. Now, how do they know it is big? How? It's very easy to know company capitalization. Capitalization, it means you see the outstanding shares that the company has. For example, a company has 1 million shares. The stock is $1. Okay? How much is this company worth? It is $1 million. $1 million is a very, very tiny company. Very, very small. And then you will see a company, it has 1 billion shares outstanding. 1 billion. It's not 1 million. It's 1 billion. Then the stock is 100. So this company, multiply 1 billion by 100, it is 100 billion. So the company is big. It could be in Dow Jones. You see that? So the big companies are respected. And mutual funds, they buy them. Investors, they buy them. We have a lot of what we call analysts. They speak about them. But a company that it is 1 million, who will speak about it? Okay, so it's so tiny, it has no future. Maybe next year it stops doing business because it loses everything. Okay? So, that's why penny stocks, usually what we say penny stocks are from $5 under. Some they say $2, but it's $5. But there are some stocks that are bigger and they are considered penny stocks, although they are not penny stocks because of the price. Because they are so volatile. You find sometimes a stock that it is $10. It's not penny stock, okay? It is a small stock, but it's not penny stock. Let's say penny stock is from $5 under. $10. But there is earning news. Next day it becomes $20. So you make 100% of your money. What does it mean? It means it is volatile. Or you find a stock that it is $10. I see that in Square. I don't know now how much is Square, but I see Square because I know it. I know it because before it was public. I don't know if you know Square. Square is just a small device you can put in your cell phone, in your smartphone, and you can accept credit cards. For example, this is funny because before it is a solution. For example, you want to sell your car, okay? And let's say someone comes to you. He comes to you, let's say he drove like 30 minutes or 40 minutes. He drove to you and he wants to buy your car. And you tell him, okay, give me the cash. Let's say the car is $5,000. And then he tells you, oh man, I forgot the money at home. Okay, he just forgot. Now you tell him, okay, you forgot. Yes. Do you have a credit card or debit card? Oh, he said yes. Oh, say. Okay. So there is a small device you put in your smartphone and you swipe his card and you put the number, how much? $5,000. And then you let him sign and then you hit submit and that voila. And you get your money to your account, to your checking account or whatever account you have, a bank account. So this is a solution, especially those people who sell in the open market, like in the fair or open market, or where there is no way to use credit card. So this is a solution for those people, and you can use it. You can, and it's free. It means you are not going to to buy this. You ask the company, they send you the device, which is a square device. You put it whenever you want to buy something, to get paid. You can use it in the street or in the fair market or whatever you go. You can do transactions like this, and they have a percentage, 2% or 3% or 1%. I don't know. So why I speak to you about this credit card, which is called Square. Because when it comes into the market, it was $10. In a few months, it goes to $100. Few months. It means if you put 10,000 in 8 months or 1 year, you will get 100,000. This is unbelievable. This is what I tell you, that penny stocks, they are like options. Okay? And even some bigger stocks than penny stocks, like $10, $15, $20, they can be volatile as penny stocks. Because the characteristics of penny stocks is that they move with high percentage. For example, you see, for example, a stock moves in general, stocks in general, for example, they move, let's say, 1%. Yeah, most of the stocks, 1%, 2%, 3%. But when you see penny stocks, it can do 5%, 10%, 15% a day, 20%, 50% a day. So you can see that penny stocks are moving too fast. So that's why you can make money if you know how to trade. But they are risky. Since they can go 10% in the day up, they can go 10% down. So it is a risky trade. Okay? So when we compare options with penny stocks, it's nearly the same, but it's not the same. Here is the deal. Let's say you buy $1,000. You buy option contracts. I don't know how many. Depends on the price. Let's say you buy 5 contracts. $200 each. It's $1,000. You spend $1,000. And you buy a call. It means you think, before the earning news, you think that there will be a gap up. Let's say Facebook. You put $1,000. This is just an example, okay? If Facebook has a gap up, what does it mean? You will be making a lot of money. 1,000, it becomes 4,000, 5,000, 3,000 or 7,000. You will be making a lot of money. But what if we have a gap down? Your option call will be worthless, will be just the time that you buy for. Let's say you buy it for 1 week. You will find only $50 for 1 week or $20. This is what you find in your option, because you are buying time. You are buying time. That's why you only see the time, $20, and then if you stay one week, it becomes down and down and down, and then becomes zero. Okay? So understand that options are very, very dangerous. The calculations are very, very dangerous. So what I mean is that try to be careful of options. Okay, so it's not easy, and it's not because it is cheap that you think it is good for you. Cheap doesn't mean it is good, because in trading, the most important thing in trading, options or stocks or anything, what is it? Is to protect your money. This is your first thing, to protect your money. If I enter a trade and I will know that I will make 50% up or 50% down, is it a good strategy? For example, you go before the earnings of any stock that always you see it has gap up and gap down, and you choose one. You say, for example, Facebook, this time I think it will go up. There is a gap up, so I make money. So I buy a call. Do you think that this is a good strategy? It is not. Here you are what? You are gambling, because you will never know the price, how it will be tomorrow after the news. And a good strategy, the first thing, a good strategy, what it does to you, it protects your money. It protects your money. This is the first job that you do in trading, is protect your money first and then make money. It's not make money and then protect yourself. Okay? Because trading, you are doing a lot of transactions. You are buying and selling. If you know how to trade, you minimize the risk. There are many ways you minimize risk, stop loss, and there are other things you do All this I explain in my training. Or if you have a golden subscription, you will see all this stuff. Stop loss, account management. There are a lot of techniques you can control your money. It means you manage the money well. It's like you when you manage your paycheck. Okay? You manage your paycheck. Let's say you have let's say your paycheck in the month, let's say it's bi-weekly or weekly or salary. Let's say it is $3,000. $3,000. Okay? If you are a good person and you should pay your bills, pay your rent, like rent, bills, or house mortgage, or you should have time, you should have money left to invest some money and to have some money in pocket. So if in your 1 month you don't invest in stock market or any other investment, what does it mean? It means that you are not doing good. This, if you are not spending more, which is the opposite. Even if you don't spend more, you get 3,000, you spend it. Another month, you get 3,000, you spend it. Now, if you want in summer, for example, you want to take 2 weeks, you go to a vacation. Since you don't invest in stocks, since you don't have a saving account to put some money aside for emergency thing or for vacation, how can you go? And then you will see that yourself, you don't manage your money well. So your trading account or your investing account, it is the same thing. You should know how to manage it. It's not just to trade. Because when you trade, and sometimes you begin to see that you are losing a lot of money. But you don't know why you are losing a lot. Is it strategies? It is managing account? You will never know because you don't know. Okay? So, ignorance is a real disease. If you don't know how to manage your money, like in paycheck, you will be in trouble. Sometimes you have a good job. You have a nice apartment. You have a nice girlfriend. You have a nice car. Let's say you are doing good. Let's say you have $5,000 or $7,000. You have a single home. You choose the best girl in the not say in the market, but the best girl in the city, and you are happy. You have a single home. You have a nice car. You are doing good job. But the problem is that you are spending every penny that you earn. $7,000 or $10,000 each month. You are spending it. Now, what will happen when you get a problem? Let's say you get fired. Or you get an accident, you can't work. So what will happen to you? You get $10,000 each month, and then the next month you get fired, you don't have $10,000. So from where do you pay bills? Your mortgage, your girlfriend, your car. Okay? What do? You begin to lose everything. Since your girlfriend she doesn't want to live with someone who is jobless, you have no job. So she will make an excuse and she will argue with you and she leave you. Okay? This is the one thing. 1 month, 2 months, 3 months, your mortgage, if you have a house, single home, for example, the bank will come after you. They say, man, you didn't pay 2 months or 3 months. You will go to a foreclosure. So you lose your house. So what is left is your car, And if you are making payment to your car because it's a nice car, let's say it is 50,000 or 40,000, and you want to show off that you have money, you have a good job, good girlfriend, you have money, you know these guys, how they show off. Okay? So, what will happen is that you lose everything. You lose your car and you'll be homeless. You understand how managing your money is so difficult? Okay? Now, let's continue with options. We have 50 minutes done, so I will continue with options. Now, the good things about options, it's very easy. It's very easy because you can follow the stock. You can buy a call when the market is going up for a stock. You can do selling short when the market is going down. Okay, and this is very good. It means it's not. It is, and you know your risk. For example, if you put $1,000. You will understand that the whatever you want to lose is only $1,000. This is good in options, because in terms of risk, at least you will know how much you lose. Now, what if you buy the whole stock? It means 100 shares. Let's say Apple at 200. Okay? $200. You have 20,000, you put it in a stock. What if you have a gap down? How much you lose? You will be losing a lot of money, more than your options. According to your stop loss, according to where you want to exit. Okay? So this is very, very important to know. Okay? Now, let's go now to options itself. Option itself, there are many things that you should understand. So for me, I have one training in video explaining this training, which is how to trade call and put options. I give you the ways to trade, and I have another ebook that I don't make in a videos, which is called When to Buy Exactly Call and Put Options. It means according to my strategies. You follow my strategies in stocks and you do options. It means it's the same. Because if the stock goes up, your options will be going up. So the same strategies, but the risk is different. So you should just know how much you want to risk in each trade. Now, in options, as I told you, the main thing, you will have to buy the time, and this is too bad. If you don't buy the time, it will be better. But you understand that Wall Street has added this time value. They have added it in order that they make more money. It means they say they rent you. It's look at this. It means they just rent you the option. This is what does it mean? Because when you stay, for example, when you buy an option for 1 week, the same strike price. It means the same price that you want. But the problem is, if you want to stay 6 months, you see that your option will be way too much, because they added the time. So the time they sell it to you, it means as if you are renting. And this is a major drawback. A major drawback because you are paying for to stay. Okay? But in stocks, if you buy Apple, you stay 10 years, you pay nothing. That's why Warren Buffett buys stocks. He doesn't buy other things like mutual funds, or because there are fees in mutual funds, in ETFs there are fees, in options you buy time. So he is not worried about all this stuff. He wants just stocks. It's like when you buy a land or you buy real estate. You know that in the future it becomes more and more and more expensive. Stocks, most of the stocks, the whole market, stock market, is always going more and more and more through years. Okay? So that's why it's the best investment in the world. There is no better investment in real. It means in virtual than trading stocks. Investing in stocks, because you buy something and you leave it. If it's good investment, you will be making money and sleeping in your home. And that's what Warren Buffett and the other billionaires and millionaires do. Okay? They put their money, they get dividend, and they stay. Okay? So this is one thing. Hello, Shopping Guide. Thank you very much for coming. Shopping Guide. Thank you, Bill Allison, for coming. Thank you. He say, love the real life examples you are using. Yes, Bill. I'm trying when I speak to you guys, because you are living creatures. Okay, I'm not speaking to virtual things. You are a human being. You are living. Most of you are living in America, so it's something that it is something that you see and that you feel about financials, about emergency funds, about investing, about your real life. That's why I try always to make these examples. Thank you very much, Bill Allison. Now, what about these options out of the money, at the money, and in the money? So these are just, you should choose these according to what you want to pay. Out of the money is the cheapest. Out of the money is the cheapest. I will give you an example. Let's say the stock is $100. The strike price is $110. It means this strike is in the future. It means it is not now. So since it is in the future, no one knows if the stock will go in 6 months to that price and reach it and go over. So that's why, because it is a gambling, they sell it for cheap. Okay? Now, if it is the same strike and the same price, now it is called at the money. Okay? It become more expensive. Now, if you want to buy in the past, and this is called in the money, because this is the only way, which is very strange, is that in the stock market, in options, they will let you buy in the past. This is what we call in the money. For example, the stock is $100 now. You find a strike that it is $90. And you say to yourself, why do they sell me a stock that it is let's say this stock now is 100? How can I buy it with 90? Are they stupid? Are they stupid to sell me this for cheap? But understand that this is just the value, and it is in the price. You have already paid this price by having the option, which is more expensive. It's there. You think that Wall Street guys are stupid, but you don't understand that this is not, Wall Street are not stupid. They just sell it with more expensive. If they go down, you will be losing a lot of money and you don't know. These are Wall Street creation. Understand that anything in the Wall Street, it is in the benefit of Wall Street guys. Now, Wall Street guys, when I speak about them, it is anyone who doesn't risk money in the stock market. For example, the market maker. You see the bid and the ask. Why when you want to buy, you find it more expensive than when you want to sell? These are the market maker. The exchange, they give them the opportunity to make money by helping the market work. Because the market makers, these are the people who make the market work. Because you want to buy, let's say between a stock, let's say it is 5 cents between the bid and the ask. Let's say I give you a small example, okay? The ask is $1.05. You want to buy penny stock, okay? You find it, the ask is $1.05, okay? So you pay $105 for 100 shares, okay? That's good. But if you want to sell, they will offer you the bid only $1. So how much you lose? You will lose 5%. Just by buying, and you want to sell. For example, you are mistaken in the stock. You put in your paper too many stocks, and you just get mistaken. Instead of buying this, you buy that, and you want to exit very quick. You realize that sometimes when you are in a rush and you don't know what you are doing, you do these mistakes. I think most of you, if you are doing day trading, or you will have seen this problem. It means people who are not very, very experienced. Because when you are experienced, you don't play, you don't be mistaken in a stock. Okay, you want to buy Apple is going up, you buy Facebook is going down, and then you think you are making money, you lose money. Okay? So, this is what we call the bid and the ask. That's why the ask is always more expensive than the bid. Who will play with this? It's market makers. That's why they make, if they are big market makers, they will make millions of dollars a day. Because it is not only 5 cents. 5 cents is only in one share. Understand, they will buy and sell millions of shares a day. And this is through software. It means it's not them staying and the orders are coming and they are selling. No, there is a software they have to handle all this stuff. So it's not easy, okay? It's something related to technology. But in big exchange like New York Exchange, people, they do it live. And you see people, they raise their hands with some symbols like this. Those are traders. Okay? And the guys who are sitting, which is the specialist, is doing the transaction, and they help him market makers. So it's all that, but I'm not going to explain all this stuff. So, options you can buy in the past, you can buy for now, and you can buy for the future. So it depends on you, what you want. You should calculate this. Okay? You should calculate this, and you should, if you want to be a trader, you should know these techniques. You should know your risk, and if you are good after many years, 1 year or two, you are trading. If you want to succeed, you will succeed. because you practice. A second thing, you should correct your mistakes. Okay? If you do the same in 1 year and you don't stop, you don't see what's going on, you are losing money. You begin with $10,000. At the end of the year, you have $5,000. Why? Because you are doing the same mistakes. Okay? You are doing the same. So what is the problem? You should fix all these problems. Now, when you begin to fix, you begin to see some money. When you fix almost all the problems, you begin to see the money good. That's trading. Okay? So, all this stuff, since we are speaking about options, try to understand the difference, and it's not easy, especially in risk and what to choose and what to do. Now, if you are interested, if you go to my website, you will find one training by video, which is called How to Trade Call and Put Options. You find only one ebook. It says when to buy exactly call and put options. So these two training that I have, I don't develop other training. So and this the ebook speaks about my strategies in swing trading and applied to options. It's very easy. If you know my strategies, you can use options without reading my without having my ebooks. But if you want to know more about options, you will understand better. Okay, so I can. So my website is always, as you might know, it's always in the description. You go to my website djellala.net, and you can you just check those that I told you. So we have only one in ebooks, only one. When to buy exactly call and put options, and I have one training by videos which is called How to Trade Call and Put Options, which is training I think 14. Okay, so now in general I have finished options and stocks. Please write your questions. I will begin with the first statements or the first questions, and then I will begin answering your questions. Okay, let's okay, Tony is the first. Now O2 is the first thing about options. He said you can lose your shirt in options. Yes, especially in earning news. You can lose your shirt. You put $10,000, the next day you find $100 or $200 because you buy a call. Next day you find a gap down, or you think that the stock will collapse because the stock has been going down, and you think it is sure that it will come down, but there is good news, and you see that you lose all your money. That's why you are predicting. So in trading, you should never predict. This is your mistake. You should have a strategy. Because a strategy, it deals with a lot of things. It deals with when to buy. It deals how many shares to buy or how many contracts. It deals with the risk. It deals with your managing your account. So strategy is a full thing. It's not just one thing. Okay? So understand that. So thank you, O2, for this question. The second question from Tony. My question when you finish the subject is, what do some companies only pay dividend but don't show earning news? Example, FLO. And it doesn't show earning news, and they pay dividend, So I should check. Let me have a minute. Let me just check. I will check for you if I can find. Okay. First, Tony, I have given you Yahoo Calendar. I think you don't. How do you know the why you said there is no earnings? I go to Yahoo Calendar, I find it. I will show it to you. So you will see now. You will see Yahoo, and the stock is called FLO, and it shows earning news. So maybe you don't know how to search. We have earning news calendar. Just put earning news calendar in Google and choose Yahoo Calendar. Now here is I will show you. Okay. So this is FLO, which is Flowers Foods Inc. Now the last earning news was in 6 February. No, the new one is in 6 February. It means this week. So today is 2nd, 3rd, 4th, 5th, 6th. Monday, Tuesday, Wednesday, Thursday. So it will be Thursday. And the analysts say it is 0.17 cents. So please, I will tell you, try always to use Yahoo Calendar. If you don't find in Yahoo Calendar, put the stock and put earning news, it will show up. But understand, okay? And they give you a lot of earning news. 13 May, 5 August, and November 4. It means the whole year. So this company gives all the dates. So you have no excuse to tell me that you don't find it. And Tony, I will tell you something very, very important. Okay? Tony, I will tell you very important thing, not to be mistaken. If you don't find something searching, send me an email. Or any one of you guys. If you are interested in something, but you don't know, you just send me an email. You say, Kareem, this stock I don't find in earning news. Can you help me? I will help you. Okay, I will not charge you. Just send me an email. I will help you. Okay? So I think, Tony, you get new information today. Thank you very much. NASA said, most of the time professional traders sell options. They don't buy. No, listen. What do you mean by sell options? They don't buy. You mean those most of these people are not day traders or swing traders. Those people are investors who sell options, calls or puts through their. Now you, for example, if you have a stock, you own it for many years, you can each month sell options. If you don't know, just call your broker. He will explain to you what to do. When he explains once, you write it, you do it, and then next month you can do it by yourself. So you should, okay? you should ask your broker, because it is complicated a little bit, and there are many risks also. When you sell for 1 month, for example, you can't change your mind. You have already sold, so there are a lot of complications. So you should call your broker, and he explain to you how to sell if you are interested to sell things. And understand that the one who sells options, it doesn't mean that you make money. Yes, you get money at first, but sometimes you lose a lot if the market is against you, is against your stock. You lose a lot of money, and you can't stop it. You can't stop the option, because the option is linked to your stock. And there are a lot of complications, so you should call your broker. So selling options, it doesn't mean that you will for sure make money. If it is sure, why the investors, all the investors, they do the same? They don't. Most of the investors, they don't. Some of them, they sell, but others, they don't. Because it is risky also. It is a trade. It is you are, although you are an investor, but you are making a trade. Why? This trade, it takes, for example, 1 month, because you sell a call, and this call for 1 month. So it is as if you are doing a trade. But the good or the bad is that you get money, and you wait for 1 month what will happen. Sometimes the option will be worthless. It means you keep the money and you keep the stock, which is very good. But sometimes, some other time, you get the money, $1,000 for example, but you lose $5,000. So you end up losing $4,000. So selling options, it doesn't mean that you make money. Because understand, there is no sure thing. This I always speak about. So NASA, take this, what I am telling you. There is no sure thing in the market. If there is a sure thing, everybody will be making money. But there is no. It doesn't exist. You always have to risk your money, whatever you do. If someone tells you it's 100% sure, he is the biggest liar in the whole world. It means in our earth. Maybe there are other people in other planets, or there are other creatures. Okay? Let's say we have alien outside. So this guy will be the biggest liar on earth, because we don't know the other liars outside earth. Okay? So NASA, stay focused. There is no sure thing. Selling options, it doesn't mean that you are going to make money. There is a risk of losing money also. But the good thing is just you get the money. You get the money when you sell, yes. And if it is worthless, yes, you will be making money. If the stock goes up, you will be making money from the stock. You will be making, it means you are good. But understand if it is the opposite. Okay? The other guy will lose 1,000 in his risk. For example, the stock, he buys from you a call. But for 1 month. And then the stock is going down. He will stay. After 1 month, the stock is going down. So what is the problem? He will lose only 1,000. But you will be losing, let's say, $5,000. If you take 1,000 that he gives you, you still lose 4,000. This is just an example. I make it a big example to understand that it is not easy. You should calculate these things. If you are selling call and put options, you should calculate your risk and don't sell a lot. Okay. Jerry Pollitt said, I did win in options day before Amazon earnings. 70 cents to 539. But yes, I do think stocks is better than options. Excuse me. So, excuse me. Jerry Pollitt, what you are doing, this is not a trading that what you did. What you did is called gambling. It's like when you buy a lottery ticket with $5, $10, $100, and you want to make $100 million. The chance in stock market is better than in lottery, because the lottery you buy only $1, $2, $5. But if you put $10,000, it's a big risk. You can make a lot of money if you are right. But what if you are wrong? Do you understand that this $10,000, tomorrow you will see that it is $20 or $50 or just the time you stay? So you understand? So, Jerry Pollitt, from this time now, I'm telling you, if you continue with this game of gambling, one time you lose your shirt and then you remember me. You say, oh, that guy is called Djellala or Karim. He told me, but I didn't listen. I was stubborn. Yes. Just put it in paper. And I will sign it for you, man. I will sign it to you and send it to you. If you continue playing with earnings, with options, one day you lose your shirt. You put $10,000, tomorrow you don't find it. It's a big risk. I don't want to make 100% of my money if one day I will lose 100%. I'm not. Because 100% lost, 100% made is equal. So you will not be making money. And if you mistake another time, you will have no money to trade. And this is the biggest problem in trading. You should control your money and you should not lose your money. Your money is like your blood in your body. I will explain, because some people, they don't understand this. If you have an account, $10,000. $10,000 is your money. It is your blood. If you begin to lose 5%, 10%, 20%, you are losing your blood. So you should stop to see what's going on, why you are losing. Now, in real life, you are better controlling your risk than in stock market. For example, let's say you are working and you cut your hand. What's the thing that you do? The first thing you do, what's the thing that you want to do just when you are cut? Is you stop the blood from coming out. Because the blood is what makes you alive. If you leave the blood, you are bleeding, and then in one time you faint and you fall, and then you are bleeding, and then you die, because the heart has no blood to pump for the brain, for the muscles, to be alive. You will be dead. So try to think that you are doing a big risk and you are gambling. Because what is the difference between gambling and trading? Trading, you know your risk. You know where you are going. But in gambling, you don't. This is like kamikaze trading. I have made a video about kamikaze trading. It's just you say, okay, I have $10,000. Either I make 10,000 and it will make 20,000, and I will have to go to a good vacation in Caribbean or whatever. Or I lost it and it's over. I don't want to think about it. This is gambling. Stubborn people, they do this always. And they lose their shirt. And these people, they lose always their money. Artkov, hello Karim, hello. So Nasa said, some people will never trade again because they lost too much money. Day trading, never learning from the mistakes. Yes, it's not only day trading, it could be anything. It could be day trading or swing trading. Or anything that you trade. Forex, options, futures, and Bitcoin. Anything. Cryptocurrencies. Anything that you trade and you don't know how to trade, you will lose all your money by time. Now, Top Series said, is 0.5 stop loss good for a trade? If it falls down, then I get out. If it goes up, listen. Stop loss is not really about 5%. It depends on stocks. This you need a training to understand. So I can't explain to you into details because it is a training. If you go to training level 6, how to protect your stocks, okay? Training level 6 is speaking about stop loss. You can buy a ebook or you buy a training by videos, as you like. So, I will explain to you into details because there are a lot of things going on. It's not only the percentage. I give you a hint, but I will stop. If you put your stop loss at 5% and the stock is moving 10%, whenever you buy in the day, you will exit. So 5% is not good. Do you understand? So putting a percentage for all the stocks is a mistake. That's why a stop loss is something that you should think about other stocks. And there are other ways to manage your portfolio. It's not only stop loss. There are other things. And this is what I explain in one of my training about how to manage your account. I think it's training level 19. How to manage your account. So please, if you are confused, send me an email. You'll find the email in any video. Send me an email. I will send you the ebook and the link in order to buy the ebook or the training. Or you can do better if you do a subscription. You will do better because you find all this training for free. So it's better to buy this thing. Okay. So let's continue. James Armstrong, hello. Wiseman, Top Series, some stocks move fast and slow, so using the same stop loss. Thank you very much for explaining to him. So I have explained the same, James. Wiseman, you know my strategies, so you answer him. Thank you very much. Thank you. James Armstrong said, a lot of money lost of options trading of Tesla earning. Yes, some people they can make money, some people they can lose money, but this is a gambling for earnings. But if you follow the trend, you will be making a lot of money. This is better. Okay? Now, you say almost 1 billion, 1.5 billion. Yes. Do you see how people, traders, they lose their money? This 1.5 billion is the loss from these traders because they don't understand the risk. If they understand, it will be not 1 billion, 1.5 billion. Fabian, hello. Fabian, as I told you, tomorrow I will check your stock and I will send you my review of the stock that you did. So thank you very much. Carlos, I live in Miami. Oh man, you live in a hot place. I want to go to Miami. Okay, I don't want to stay here. O2 said, like Sears, yes, Sears it get bankruptcy like Giuseppe. I have made videos. I have made a lot of money from Giuseppe and from Sears when they are going up. For example, Sears reached 195. For me, I was trading it at $25, $30, $40, $50, $100. I was trading when it was going up. But when it was going down, I left it. Giuseppe is the same. Why I choose Sears? Because it was a volatile stock. Each day it can go, the stock is $40. It can go $3 a day. So I will be making a lot of money in few days. That's why I like Sears in the past and Giuseppe. But when they collapse, I make videos that they are collapsing and they say they go bankruptcy. And most of them they are bankrupt and they are outside. You find them in over the counter. You find them with 0.2 cents or 5 cents. So these companies they go bankrupt. Okay. So Wiseman said hello, Jocelyn. Good evening, James Armstrong. Can you explain the difference between short selling versus put options? I think I have made a live about selling short. Now, selling short is, what is it in real selling short? Is you borrow shares from broker. When you click on sell. You don't click buy because you are not buying. You don't want to own. You want just to sell other investors shares, because for the broker, from where he brings the shares from the investors. The investors they don't know because they will get their shares back. So investor he will never know that his shares are sold. So this is something that it is known, but no one knows, although it is known. So when you sell short, you borrow shares. And you sell them in the market thinking that the stock will go down. It is like going long. When you buy a stock at $10, you think that it's going up, you buy 100 shares. It's the same. So now you see that the stock is going down $10, it is $9 now. You think that the stock will be continuing to go down. So what do? You sell at 9 and you wait. After 1 month, the stock from 9, it goes to 4. So you will be making a lot of money. It's the same as a stock going from $10, it goes to 15 or to 17 or 20. It's the same thing. You calculate the price, you will make money. The only difference in selling short is that you pay interest rate. So if you want to do selling short, try to see your broker how much is the interest rate they charge you. Some they charge too much. They charge 10%. 10% is big. And he will explain, and the broker, if you call him, he will explain to you, he says it's just a few dollars a day. No, it's not a few dollars a day. It is. But if you stay 1 month, 2 months, 3 months, let's say you make 50%. In real, you make 50%. But your money should not be, you don't get 50% as you expected. 50%, the guy take 10%, you might get 40% or 3% or depending on the broker thing. So you are not getting the real thing. But let's say you buy stock at $10, it goes to 15. You will be getting 50% for sure, except when you pay the commission. But you get this 50%. You bought it at $10, it goes to 15. You will make 50% for real. But in selling short, you are not getting that exact number. You should subtract what you call the interest rate they charge you. And then when you want to exit the trade, you buy back, because you will find buy. Because before you put sell the shares, you buy. When you click buy, you exit the trade and you give the shares to the broker. As simple as that. Now, what is the difference between this and option? The only difference is that selling short, you pay interest rate. Now, option, you pay for the time you stay. For example, you can buy a call or put option, the same price. Let's say $10. You can buy this, but if you stay 1 week, let's say you pay $1,000. But if you want to wait 6 months, you buy 6 months of time staying. And this I have explained at the beginning of my live. I have explained this idea of staying. So you pay to stay. It's like renting. When you buy a contract, the more time you like, there are contracts that have 1 year or 2 years. If you succeed, if the stock is $10 and you buy and it goes to $20, $30, $40 in 1 year or two, you will be making a lot of money. And you should deduct this, but in real, you will be making a lot of money if you are correct. Now, if you lose the trade, you stay two years, you pay $5,000 on the contract, and then after 2 years, you will find that you have $10 after you pay $5,000 for it. Why? Because the stock is against you. You buy a call and the stock was going down and you don't want to sell. You stay, and you go to analysts. They play their game. They say, no, this stock is $100 and now it is $50. No, it is not because the company is bad. No, the stock will go up. So you will be staying. You will be staying in this stock. You staying in this contract. Stay 2 years, and then all your money is gone. So understand, is everything you do has a price. So if you are selling short, you pay interest rate. If you are buying an option, you are paying the time to stay. That's the only difference. And there is risk also. Risk, selling short, it's not like option. But the problem, selling short is more risky. As NASA said, short selling is more riskier than buying put options. Okay? I will give you an example to understand this. Okay? You go to a penny stock that it is $2. It's going down. You say to yourself, why I don't sell short this stock? It's $2, it's going down. It's now $1.50 and I see it's going down. So if it continue, I will make a lot of money. Yes. Let's say you bought it at $1.50. It began to go down until $1. You made 50%. It's a big money. But the problem, the earnings come. And this stock has a good news. The stock from $1, it becomes $5. So what will happen to your selling short? Let's say you lose 500%. You put 1,000, but you lost 500% because the stock was, let's say, was $1. It goes to $5. The broker will call you and he asks you, if you pay 1,000, he will ask you that you are down $4,000 to bring to the broker. If not, he will go against you. And he will not wait. He tells you, okay, today You should put $4,000 in your account because your account is minus 4,000. This is what we call margin call. A lot of people who do selling short, they get this margin call because of this problem. Because they do stupid things. Understand that selling short, I have two training. If you are interested, training level 11, it's called How to Sell Short the Stock and How to Sell Short the Whole Market. It's another training. Please check them if you want to understand selling short and the risks of selling short. You should understand things before even you trade or you try. Because whenever you do a mistake without knowing, it's too late. If you put if you go to someone else and they tell you it's easy, just do this and this and you will make money. This is not true. Okay? This is not true. So try always to learn. That's why I make my subscription. That's why I made a training for you guys. It is just to know what you are doing. At least, are you okay to trade? You see the problems, you see the risks. When you understand, you begin to practice. And then when you begin to practice, after a few months or for 1 year or two, then you will be making money. When you begin to make money, what is the only problem you have is you want to have more money. Because if you have $10,000, in order to make more money, you should have 50,000, 100,000, 200,000, 1 million. And then you become making more and more and more. Okay? This is the problem when you know how to trade. Bill Allison, I think I have answered your question. You say, good evening, love the real life examples you are using. Thank you very much. I'm trying to be more logical, more normal with life examples. At least you understand all what I'm saying. And NASA. Also, the spread are wider in options, so you pay more when you buy and sell. Yes. In options, you always see that the bid and the ask is always wide. Because the price is like penny stocks. It's like when you see the price $1, $2, $3, you see it's cheap. But no, it's not cheap. Because if you, let's say it is, let's say, I give you an example just to show how big you can lose. Let's say you buy an option, $1.50. It means you pay $150. Because an option, when you see the price, what you see as a price is one share. It means when you buy one, when you see the price is $1.50, it means you will pay 100 shares, which is contract, which is $150 for the contract. Because they don't buy with shares. They buy only with 100 shares, which is called one contract. Each contract is 100 shares. So $1.50, it means 150 you pay. This is the ask. But let's say you see the bid is $1. What does it mean? It means if you are selling, you lose $50. It means 50% you lose it right away. This is just an example. You can find 5%, 2%, 10%. But understand, if you sell. Now, what if tomorrow the stock goes down against you? You buy a call. You will be paying more. You will be paying this 5% or 10%. Then you pay what you lost from the trade, and you will be paying more. You understand that calculations of options is very difficult. So you should learn. You should learn everything before you do options. Options is not easy. That's why if you are doing stocks and you succeed, you can go to options, you can go to forex, you can go to bonds, you can go futures. That's what you should do if you want to go to, because there we have more money with little money. If you know how to trade. Okay? So thank you very much, NASA. I don't speak about the spread, although I speak about the stocks spread always, but I don't want to go into details because options is a very big subject. It's a training, so I don't want to go also. Thank you very much, NASA, for remind me about this thing. Wise man said, as the saying goes, if it sounds too good to be true, then it comes with very high risk or scam. Yes. Please, guys, avoid things that are sure thing. I see a lot of brokers, online brokers, not from USA, but from overseas. They are scams. They are scams. Scams, it means they will tell you that you make money, but if you put money, there are some websites that they are brokers, but you don't know even where they are in the world. It's just a website. Anyone can pretend that he is a broker or he is a broker, and you say, put this, you will get this. You think that it is true. And then when you put your money, and then he will not respond. You find a phone, you call, you don't find them. You send them an email, they don't respond. Then you begin to search on them, since they are not in USA or in a let's say in a good country, like in a democratic country where the companies are registered and you can go after them. Okay? Like here in USA, if someone tells you that you can make 100% if you put this and this, you can go after them. You can see who they are, what is their company, what is their location. You can go after them. But in other countries, you can't, especially third world countries. And some, they do what we call MLM or something like that. It is just scams that the first guy is making a lot of money and the others, they are not making. But they are not trading. They are just a lot of people, they come, they put their money. And this is against the law. It's a scam. And if they caught, the government will take all the money. So the first guys who put money, they will make money. The last guys, they put the money, they lose their money. That's it. Okay. Top Series said, how long did it take for you to really get trading down? How long did it take for you to really get trading down? So what do you mean but get trading down? I don't understand. I don't understand what you mean. Because I don't understand. So can you say it again with other words? Trading down. Get trading down. How long? What's trading down? I don't understand. For example, if I buy a stock, I put stop loss. I know where to exit. Okay? So whenever it goes down, I begin to lose money. I just exit the trade. So what does it mean? How long? It could be anything. It could be 1 day, it could be 5 days, it could be 1 month, it could be 6 months. I don't know. But I don't understand your question. If you ask your question again, I can answer you properly. Okay? Now, Jocelyn said, is it possible that when you are losing, shorting a stock, you could start swing trade the same share? Would this minimize the loss? Yes. Listen here. Jocelyn, what you are saying to me is you will be on the opposite sides. Jocelyn, you are in Canada. Let's say you are in Montreal. You are going to New York. You are going south. I give you this example. Can you go south and then you go to Alaska, which is the opposite side, in the north, west? Can you do that in one plane? Or in your car? You can't. So, trading is one direction. What you hear about hedging, this they do. The people who do it, they are what we call mutual funds. They don't care if they lose money because it's not their money. If they see the market is going down, they buy millions of shares, puts shares, like put contracts. According to their portfolio, there is a percentage, and they just leave it. It doesn't mean they don't lose money. They will lose money, but not that much. But this is not a guarantee, because the whole market will go down for 6 months and then it goes up 6 months. So he should sell these options, because the market is going up. So it will be very, very overwhelming, and it needs a lot of calculations, and you are not going to make money, because for sure you are going to lose money, but less. Instead of that, put stop loss. You buy a stock at $10. You think that the stock is going up, that's why you buy it. You go long. Let's say you put a stop loss at $9. Just an example, okay? Let's say the stock goes up. Here you are good. But what if the stock goes down? $9. You put, for example, you lose 10%. Yes, you have lost 10%. You know how much you lose. You know the trade, which is very good. Okay? But telling me you are buying a stock, going long, you think it's going up, then it goes down, you buy a put, then it goes up, you lose the put, then it goes down, so you are going to do a strategy that doesn't work in real. But some people I see them online, like in YouTube, they tell you these strategies, but it will never work, because you will lose at the end. You will lose. You can't be in two directions. Okay? You can't be in two directions, and you can't make money. No one is making money by two directions. But if you see a stock is going up and you buy a call, or you buy the shares, and it goes up, you make money. Now, let's say you sell short another stock on your account. You are selling short another account, which is going down. Yes, you make money. But these are two stocks. They are different. This is what you should do. You should always, each stock, you go one way. You don't go two ways, opposite ways. And I give you an example of driving a car. I am here in North Carolina. I want to go to New York, and I want to go to Miami. So two opposite directions. How can I go there? I go 5 miles to New York, and they go back 10 miles to Miami, and then go. Well, what's this? This will lead nowhere. I lose gas. That's it. But I am not moving. Okay? So this is an example. And if someone convinces you, try. But I'm telling you, you lose. And when you lose, you send me an email. You say, Kareem, I tried, I lost. If you made money, you show me. Show me how you made money. Okay? But for sure, you lose money, because you are in both directions. Jocelyn said, I get it, thank you. Yes, I want to emphasize, Jocelyn, to emphasize very well, at least when you get my idea, you can try in the future. If you don't, for example, you say, okay, I will try to use little money and will try to check. Maybe I succeed. Yes, you may succeed. Now, when you succeed, send me an email. You say, Kareem, I did this and I did this and I make money. And I will congratulate you, and you say you have found a great strategy, and you will become a very good trader. Yes. But the success is 0.0%. 0.0%. So the chances to lose is 99.99. It's like gambling. It's like when you buy a ticket, lottery ticket, and you want to make millions of dollars. But you think always about millions of dollars, but you don't think that the whole year, the whole life, you are gambling. And you are not professional. There are some professional gamblers, they use calculations. In order to make money, they know the game. They are very, very experienced. Sometimes they lose a lot of money, sometimes they make a lot of money, but they are into this kind of thing, and they know a lot about how things work. So Chris Johnson, thank you Chris for coming. He said, is it possible the stock market will crash on the coronavirus? I sold everything on Friday. Yes. Now it could be a sell-off, but it's not a crash. Now crash, what does it mean? A crash, it is not a sell-off. What happened in 2008 was a correction. Correction, it means when a few days the stock market goes down and then it goes up, it goes down, it goes up. But when we have the crash, it means it continues to go down for 1 year or two. Like in 2008. In 2008, it's called a crash of 2008. Why? Because almost the stocks has lost 50% of its money. Even Warren Buffett, his stocks lost 50%. You understand? Because the whole market collapsed. There is no way to make money except when you do options, and you are right. Because the options, it's a few days are going down. You make money, then a few days it's going up. Then you pay for the time. So it's a lot of trouble. Okay? A lot of trouble. Yes, for me, this week I did not trade anything. I didn't sell short. But the other week I asked my subscribers, all of them, I just tell them that in my account of trading, I will sell everything. And I was right. Because I see Trump impeachment and I was worried about this news. On Monday, the market did a correction. It means it goes down too much. On this Friday, also, the end of the week, it was another correction. It means the stock market goes down too much. Now, next week, I don't know. With Trump impeachment, with coronavirus, with other news, we will never know what will happen in the stock market. So be careful. Be careful. You might do selling short. You might do selling short in day trading. You might do, especially when in the beginning of the day it is red and continues to be red the whole day. This is the good days of day trading. You can do swing trading also. You see a stock is going down. It's going down. In my subscription this week, it means yesterday, I make a video how to sell short for swing trading, and I showed them some examples. Okay, some examples where to sell short, what to do, what are the measures to do, how to protect yourself. I made a video about this for my students. Okay. Chris Johnson said, should I buy gold or bond for protection? You know, bonds is with interest rate. It means they give you interest rates. But if the bonds go down also, you will lose money. Because the people, they don't know that the bond is not just a loan, a normal loan. People, they think that in the explanation, if you go to explanation online or videos, they say, municipal bonds or state bonds or treasury bonds, you just give them money, they give you 7%. You are making money the whole year. No! You are stupid to think that it is a loan. It is not a normal loan. They give you 7%, yes. But the problem, what if the bond goes down 10%? They give you 7%. The bond goes down 10%. How much you lose? You are losing 3%. So you should understand what you are doing. Don't listen to people or don't read. Don't read without understanding, because sometimes they show you something which is so good, you think that, I should go. For example, bonds. You know that the price of bonds change. But when you give them the money, you give them the bond at that time. For example, you give them $10,000 at that price. The price of the bond is $10. But what if the $10 goes to $5? Whatever they give you as a percentage, like 5%, 7%, 10%, you will be losing more from the bond price. You should understand that. Gold, you buy gold. Listen, if the stock market is going down, most of the time gold and silver and the precious metals go up. Yes. But if it is too bad, the year is too bad, you can buy gold and silver and you can make money. Yes. In the stock market, you find them going up. Yes. Chris Johnson said, Jim Cramer said, now is a good time to buy USA government bonds. Yes. Do you know why he said that to you? Do you know why? Because the brokers, mutual funds, they pay him. Do you know this guy how much he make a year? I'm not saying to you how much because I don't know exactly. But he is making maybe 20 millions, 50 millions a year. This guy that you see him. Do you think that he gives you free advice like this? He is just going to TV to sell you, to help you because he's a good person? These analysts, these gurus that they show you, they work for somebody else. It means they are paid to tell you what they say. If they say you buy these stocks, there is no guarantee that these stocks will go up. But because a lot of people they buy, the stock goes up a little bit, they say, oh, he's right. But the stocks can go down and you lose all your money. So try not to take an advice from an analyst. I'm telling you this. Now it's your choice. If you want to follow this, one time he tells you this stock goes up and you make money. You think that he knows. The future, no one knows the future than God. There is no one who knows. If I tell you tomorrow what will happen to you, you will never know. Okay? There is no guarantee that you leave tomorrow or you make money tomorrow or you stay in your job tomorrow or whatever. Maybe you go to your job, you get fired. Maybe you get an accident. Maybe you go hospitalized. This is the future. If someone tells you the future, that you make money, he is the biggest liar in the world. I'm just giving this example before. On earth, someone who tells you, like a human being, he tells you that future will be good for you because you buy this stock. He is the biggest liar because if he knows, he will never tell you. If it is someone who knows the future, but in existence there is no one who knows the future. You can do probabilities like me. You do probabilities, yes. But I don't know. I buy the stock today. Let's say I buy it on Monday. If it doesn't work, I sell it with a loss. I don't know. And I have never told in my channel that if you follow my strategies tomorrow you will be making money. No. There are a lot of things you should learn, you should practice in order to make money. So Wiseman said, Top Series said, how about investing in rates? So rates are companies that they rent. It's the same as stocks. They are companies that they buy locations, they buy and they rent them. Okay? They buy using loans from the banks and they buy properties and they make money. So it is a stock. If it goes up, you make money. If it goes down, you lose money. That's it. This is the thing that you should take care. Now, I have spoken about rates in dividend. If you are interested, you can check training level 16. How to invest in dividend stocks. I speak about rates because there are a lot of differences between stocks and rates in that matter. So if you are interested in dividend, dividend investing, you should check my training, which is 16 how to invest in dividend stocks. I explain a lot of things. Okay. Now, Wiseman said, trading down means stop losing too much money and becoming a professional swing trading. Oh, this is what he means? Now, for me, it takes me around 1 year. I begin to make money, and then I lost my money. A lot of money. Because I just trade. I don't know. Any strategies that I read in books, anything that I see online, I just read and trade, and watch videos, read it, until I lost almost all my money. So what I did is I stop. I go to my trades and begin to question to question all what I did, and to see the strategies that I took from books, from guys. They say, oh, this is strategy good, work. And then I find my mistakes. Now, in the other 6 months, I begin to correct them one by one. And then I begin to see the money. When I begin to see the money, it's over. I begin to make money each year, and that's it. So this is what he wants to know. Now, for how long? I say around 1 year. And then I bring other money, 18,000. I begin with them. In 6 months, I get to $62,000, and I continue making money until now. So this it happens in 2010, 2011. And other time, I explain things according to my way, the beginning of my channel. And in 2014, I begin my business. It means teaching people, and I taught thousands of people. And I have my subscription now, which is easier than teaching one-to-one person, because it was before I teach only one-to-one. I don't teach by ebooks or by training. Okay, now it is easier and it is cheaper, because before it was more expensive than now. Okay, so guys, now it is 2 hours 7 minutes. So thank you very much for coming. I hope I have explained a lot of things. If you are interested in options, you can see my training. If you get confused, please send me an email. I will be happy to help you. And my email and my website, they are always in my videos. You take any video, you find my email or my website, and you order. Or you can check my subscription if you want to. And then if you have questions, you are always welcome to send me an email, because sometimes you don't wait until next week until I do the live. If you need me in anything, or something you don't understand, or something you are confused about, just send me an email. Or you can go and do Facebook Messenger. So please, guys, for the guys who do Facebook Messenger, so as you know me, my name is Abdelkarim Ramain. This is my name. You search Facebook on my name. You find my profile. You find my picture. You can without adding me, without adding as a friend. You can add. You can not. You can find the message. You send me a message. It's very direct and very easy. If you don't like sending emails, you can. A lot of my students now they send me email. They send me just Facebook Messenger. I'm always there at any time, day or night. You say, okay, Kareem, I need you in this. What do you think about this? I will give you help. Okay. So thank you very much, and this is the end of this session. Thank you very much, and see you next week. And if you are with me in my subscription, golden subscription or silver or basic, I will give more details about what's happening, when to buy stocks, when not to buy. For example, I was right last Friday, not this Friday, not last Friday, the other Friday, I ask my students, all of them, he say, if you take my suggestion, sell all your shares because I don't feel well. For me, I sold all my shares in my personal account. I sold everything. I sold my account in the portfolio account that I use to do trades for my subscribers. I sold all and I showed it to them. On Monday, we have a gap down. So if you stayed, if I stayed on Monday, I could lose a lot of money from my account, either personal account or the virtual account I use for my students. On Friday also, this Friday, the market lost a lot of money, 2% or 3% or whatever. Some stocks lose 10%. You see Apple 10% today. Yeah, man, it's too much, 10%. Understand? It's a lot of money that you lose if you don't understand what's going on. It's not just to trade stocks. You should see the news. I don't trade the news. But I am aware of news. If there are some news that are near, and I know there is a problem, so I should make a decision to stay or not to stay. Okay. So thank you very much, NASA. Good night, everybody, and see you next week. As I told you, search my name, Abdelkarim Ramain, and then in Facebook you find me. Send me an email or send me a message, a Facebook Messenger, or add me as a friend and send me a message wherever you want. Okay? Thank you very much and have a nice day.